Monday, April 6, 2020, MONERO 64, home of alternative economics and contrarian views. This morning, I want to touch upon why the conclusion of the current credit cycle reset is going to be very painful. Before I do that, I want to quickly look at what's going on in the markets this morning here in London, some of the headlines, and then we'll go into the reset topic. So it's just past 8 a.m. London. So some of the headlines we've got is Boris Johnson taken to hospital. That's in the FT. Asian stocks rise on sea disease hope as oil prices drop. What else have we got? India bans exports of Trump's game changer anti-C drug. That's on the Zero Hedge website. So we also got some headlines on Bloomberg.com. It says U.S. stock futures climb 4% as virus toll eases. JP Morgan says slowing U.S. virus cases to put floor under stocks. I'm not too sure about that. So that's what's out there. Let's then look at what the actual markets are doing right now. We've got spot gold at $16.26. That's up $8.50. High has been $16.31. The low $16.07. Silver's up 13 cents at $14.51. High's been $14.58. Low $14.22. The Dow futures up 802 or 3.8%. At 21,860. S&P 500 up 96 points, 3.9% at 2585. Just show you a chart of the S&P. I still think we're not out of the woods. Yeah, we could rally a little bit today or tomorrow, but I think we're still going to see a big drop lower. I think things are not as good as JP Morgan and others want to portray. In my opinion, I think there's still a lot of uncertainty as it pertains to this crisis. So let's continue here. NASDAQ 100 futures up 308, over 4%. Currencies are fairly quiet. Sterling is unchanged, 122.65. The price of gold in sterling, XAU GBP this morning, 1326.67. So that's about 10 pounds higher, the price of gold in pounds this morning. The FTSE 100 futures up 148 or 2.7% at 55.47. The euro unchanged, 108.09. The dollar is up 0.2% against the Japanese yen at 109.17. WTI crude down 15 cents at 29.45. The high has been 30.37. There's talk that the Saudis and the Russians have agreed on a deal. I saw a headline come through from Seeking Alpha. What do I think about the oil situation? I think it's quite outrageous, actually, that a president of the United States wants higher oil prices when the economy is entering probably the worst depression ever. We've seen unemployment climb massively the last few weeks. The jobless claims, we had 10 million people claim for unemployment. There's some banks who are forecasting like over 30% unemployment rate over the next few months. So why would you want higher oil prices if people are struggling? Well, because he wants to save big corporations, big oil corporations. And I think that's outrageous. But I also think what the higher oil prices will do in the slowing economy is actually cut demand even more. And eventually those prices, oil prices, are going to crumble again. They're going to drop massively. And that this time they'll go through 20 like a hot knife through butter, in my opinion. Bond market, the 10-year yield is up about 6 basis points at 65. So to the reset. Just wanted to first go through the word itself. So I've got the Merriam-Webster dictionary. I could have used the Oxford English dictionary, but I chose to use the Merriam-Webster. So reset, definition, to set again anew. So to change the reading of often to 0, reset an odometer. So I think when we talk about reset, especially me, yeah, a lot of people talk about the currency reset, but I look at it more as the reset of the credit cycle. And I think the Dow Gold ratio is a very good barometer or odometer for that, because it measures how much gold you need to buy 1 unit of the Dow. Gold is the ultimate yardstick of value. It's a tangible monetary asset. The Dow, of course, has been the arbiter or measure of paper assets for over 100 years, stock market. So let's have a look at this Dow Gold ratio, this relationship over the years. And I've taken this from goldchartrus.com. It's a good website. I'll put the link below in the description. And you've got the 200-year history of the Dow Gold ratio. And you see that red line going right across the middle. That's since the inception of the Federal Reserve. And you notice how the credit cycles have gotten a lot more wild and more extreme. And we were told, or our ancestors were told, back in the early 1900s, that the Federal Reserve would solve the problem of boom and bust of business cycles. It would make things more stable. You wouldn't have any more financial crisis. You wouldn't have bank runs. So actually the main reason for creating the Federal Reserve has been proven completely and utter, how can I say, unfounded. Because look at this Dow Gold ratio. All that shows us is that the credit cycles have been a lot more extreme. So if we look at the chart here, after 1913, when the Federal Reserve Act was passed in Congress and signed into law by President Wilson, we see that we had that Dow Gold ratio zoom up. That meant that you needed more gold to buy 1 Dow, and it got up to just above 20 back in 1929. That meant that paper assets, as per the Dow, were overvalued versus real money. So we got a big reset after that. And that was the stock market crash. That was the drop in the Dow. At the time, of course, the dollar was fixed to a weight of gold. And that ratio got down to 2. So you needed 2 ounces to buy 1 Dow. And after that reset, it was a painful like decade or so. You had the Great Depression, you had World War II, and then eventually the credit cycle started moving up again after World War II. And we had another credit bubble, so to speak, and it topped, I think, around 26. That was in 1966. I have to say that wasn't one of the biggest credit bubbles ever. And despite that, we saw a very sharp reset or correction that took about almost 15 years, from 1966 to 1980. There was in between there a little bit of a correction. I think that was in 1975 when gold dropped from 196 to about 100. But then the correction resumed, or the reset, and it bottomed. And 1980, early 80s was a painful period, not just for the US, for the whole world economically. I think the US had a couple of recessions back to back, 1980, 82, thereabouts. Yeah, but then after that, we saw another credit bubble ensue. And most people think we're still in that credit bubble. And it does feel like it because of where the stock market is. But I would say that the reset actually began around 2000 when the Dow gold ratio got above 40 and the Dow topped around 11,700, I think. So yeah, we had the reset start then, and it accelerated after the '08 crisis. But then Bernanke and the Fed, they didn't allow it to take its natural course. So they've been fighting it for 11 years. And that's why we had the correction back up. And I think it's just a correction, of course. And the resumption or the conclusion of this reset is going to be, in my opinion, the most painful one. Because as you see from this Dow gold ratio chart over the years, the Federal Reserve has become more and more powerful. They've tinkered around with the system. They've tried to keep the credit bubbles going longer and longer. And it's only led to more and more painful resets. So I think the current one is going to be, unfortunately, one for the ages, so to speak. It's going to be very painful. I think we might even go through the one level, which will mean you could buy more than one Dow with 1 ounce of gold. Eventually, of course, we will start again, a new credit cycle, a new bubble. The only hope is that the Fed is not around anymore, and then we can get back to having more of a stable free market based system. But that's still up in the air for now. So I'll show you a shorter term chart of the Dow gold ratio. This is from dogsofthedow.com. Put the link below as well. You can see here that the Dow gold ratio actually topped around 22.5 September 2018. I think that was the true top in the stock market. And as you can see, it's accelerated lower now. We're around 12.5. So it feels like we're far away from getting to 1 or less than 1. But all we need is for gold to make new highs, let's say over 2,000, and the Dow to keep going lower. There's some people who are calling for the Dow to go to 5,000 eventually by the end of next year or sometime in 2022. So it's quite reasonable to expect that ratio to get very close to 1. If gold goes through 2,000, we could very quickly go up to 3. So I don't think it's unrealistic. And as I said, it's going to be very painful because of the Federal Reserve, because of the powers that be, because of Wall Street, City of London, the current economic philosophy of Keynesianism, the current philosophy that debt is not a problem, that we can keep inflating things and never let things correct. I think that's what's going to be proven to be the main reason why things are going to get so rough for the general public. Of course, a lot of the people at the top, the elites, they know about this. They'll be able to protect themselves. So just to finish off, one good analogy would be the burning forest. If a forest burns, a lot of times it comes back even bigger and stronger. And that's what resets are all about, cycles. And that's been the problem, I think, with the Federal Reserve, not just in this credit cycle, but since its inception. It always tries to artificially manipulate things, and it makes things even worse. So hopefully, after the current reset is concluded, the Fed won't be around anymore. We might get back to a period where there's more stability and more honesty in determining value of financial assets. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.